Fannie Mae, Freddie Mac, USDA, FHA, conventional. What's all that mean in the mortgage lending world? And what's it mean to somebody looking to buy property? So I'm going to tell you what some of that stuff means. Well, probably most of it. Hey, everybody, it's Brian Kapple with the Athens Real Estate Company. Thanks for being with me today. So, just to start out, we have to get to that base ground level for what this stuff is. So, first of all, I'm going to talk about Fannie Mae and Freddie Mac because we see a lot about these two different orgs, in the news and stuff like that. So, Fannie Mae stands for Federal National Mortgage Association, FNMA. The purpose, it was established in 1938 as part of the New Deal. Uh, Franklin Roosevelt was created to expand the secondary mortgage market. So what that means is it buys mortgages from lenders, which then allows those lenders to free up capital and continue issuing new mortgages. So basically, whoever you do your primary bank loan with, more than likely is not going to keep it because if they do, that's just taken away from their liquidity. Secondary market, excuse me, Fannie Mae grabs these things up. So they primarily buy loans from large commercial banks. Um, the focus is on making affordable home ownership possible by ensuring liquidity in the mortgage market, particularly for low to moderate income borrowers. Uh, Fannie Mae focuses on conforming type loans, meaning that loans that meet specific criteria in terms of size, borrower and qualifications, etc. So talk about Freddie Mac. Federal Home Loan Mortgage Corporation, FHLMC. Freddie Mac was created in 1970 to provide competition to Fannie Mae. Like Fannie Mae, it buys mortgages and packages them into securities which are sold to investors. This process also helps free up liquidity in the mortgage market. Freddie Mac, however, mainly buys loans from smaller local banks and credit unions. So basically, Fannie Mae gets the larger lenders, and then Freddie Mac's coming in and freeing up capital uh, for freeing up capital for the smaller banks, the credit unions. Um, Also has the same goal of promoting affordable home ownership, but it typically works, like I just said, small lenders. Freddie Mac also deals with conforming loans, but tends to focus on smaller institutions, so that helps diversify the secondary mortgage market. I'm not going to get into that. HUD mortgages, right? Uh, U.S. Department of Housing and Development, which includes various programs aimed at helping individuals achieve homeownership, particularly for low and moderate income buyers. The most common HUD mortgage programs fall under the Federal Housing Administration, FHA, which is part of HUD. So here is an overview of HUD mortgages and their key features. Number one, FHA loan. This is the most well-known type of HUD mortgage. These are designed to make homeownership more accessible, especially for first-time home buyers and those with lower credit scores. So some of the perks: low down payment. FHA loans require a lower down payment than conventional loans, typically around 3.5% of the purchase price. Lower credit score requirements. Borrowers can possibly qualify with credit scores as low as 500 to 580, dependent on the lender, um, which is much lower, right, than what's required for most conventional loans. Mortgage insurance premiums, MIP. FHA loans require the borrower to pay upfront in annual mortgage insurance premiums, which protects the lender in case of default. Flexible debt to income ratios. FHA loans allow for a higher debt to income ratio, meaning borrowers with more debt relative to their income can still qualify. HUD 184 program. The HUD Section 184 is designed specifically for members of Native American tribes. They have a down payment can be as low as 1.25% to 2.25%, depending on size of loan. Flexible credit and underwriting guidelines available on tribal lands. Number 3, Good Neighbor Next Door program. And I actually fact checked this one to make sure it's still out there. So this HUD program offers substantial discounts up to 50% on homes in designated revitalization areas for specific public service professionals, teachers, firefighters, law enforcement, and emergency medical technicians, EMTs. Home price discount, like I said, participants can buy homes at a 50% discount from the list price. The buyer must commit to living in the home for at least 3 years as their primary residence. And I believe they'll actually open up a secondary mortgage in case, and the buyers for this do not pay on that secondary mortgage unless they bail out of there, and don't fulfill the obligation of living there at least 3 years. So HUD Section 203K loan, if this is an FHA rehab loan, this allows borrowers to purchase a property and finance repairs or renovations through a single mortgage, purchase and reno in one loan, so borrowers can finance both the purchase price and the cost of repairs. Type of repairs. Eligible repairs can range from structural changes to cosmetic updates. Great for fixer-uppers. This loan is ideal for buyers who want to buy a home that needs significant work but may not have the funds for both the purchase and renovation costs separately. That's a pretty good loan. There's some other ones here. HUD reverse mortgage. I'm not going to get into that. I have not really heard that one getting used too much. Energy efficient mortgage. Again, that's something else I've not heard much about. I am going to touch this one though. HUD home programs, foreclosure sales. So HUD sells homes that it has acquired through foreclosure on FHA insured properties. Okay. This is only for the FHA. So these are known as HUD homes, are often sold at a discount to promote home ownership and community revitalization. I don't know why I'm struggling with that word today. Again, these are FHA foreclosed properties sold by HUD. Bidding process, the homes are sold via an auction process. Typically, it's an online process. Also, typically requires buyers to work with an approved HUD real estate agent. That's easy to do. Typically, the brokerages or the brokers will have a HUD number, and that's what we would use to get into the site. One owner occupancy requirement. The buyer for these must live in the home for at least 1 year if purchasing is an owner occupant. All right. USDA mortgage. I'm sure some of you have heard that before. I'm just checking my time real quick. So USDA mortgage is a home loan backed by the United States Department of Agriculture, specifically through the USDA Rural Development Guaranteed Housing Loan Program. These loans are designed to help low to moderate income home buyers purchase homes in eligible rural or suburban areas. These are particularly attractive because they offer zero down payment options, making them a great choice for buyers who may not have substantial savings. Problem with this is, especially in the area that I work in, the appraisal process. This is what they don't tell you here in the large print. Appraisal process for USDA loan is pretty strict. It's hard to find property that falls within their financial guidelines that is going to pass a USDA appraisal. And then on top of that, it's also hard to find home sellers that will agree to make any repairs to bring that up to up on par level with the appraisal process. So key features: zero down payment, low interest rates. USDA loans typically offer below market interest rates, low mortgage insurance, upfront guarantee fee, usually around 1% of the loan amount, which can be financed into the loan. There's an annual fee around 0.35% of the loan balance paid monthly. Income eligibility. USDA loans are intended for low to moderate income households, so borrowers must meet specific income limits to qualify. These limits vary by location and household size, but are generally based on 115% of the median household income for the area. Property eligibility, the home must be located in an eligible rural or suburban area. Um, they have a website. All you have to do is plug in the address and it will tell you if it is an eligible home or not. It's pretty sweet how they do that. Flexible credit requirements. They typically have more lenient credit score requirements compared to conventional loans. Many lenders require a minimum score of 640 possible to qualify with a lower score. Again, that's dependent upon the lender and other financial factors. Fixed rate loans, they do offer as fixed rate loan. So there's a couple of different types. There's USDA guaranteed loan. It's the most common type of loan. USDA direct. These are designed for very low and low income households and are issued directly by the USDA rather than through private lenders. I've done one of those loans before. USDA home improvement loan and grants. They're available for homeowners looking for repair or to improve their homes in USDA eligible areas. That's more for you're not buying a home, you already have one, but you're just wanting to make some repairs to it. So again, eligibility requirements, income level, location, credit score, primary residence. Again, advantages of USDA loans: no down payment, low monthly mortgage insurance, competitive interest rate, flexible credit requirements. And disadvantages: geographic restrictions, again, income limits, and primary residents only. Look, these USDA loans, I think, are a great tool. I've had some success putting some people in them, but really their stars lined up in the right way because, like I said, it's the USDA appraisal process and then finding in that cost range that they're qualified in. Like it's just sometimes difficult to find a nice property that's going to appraise because they really get into the rabbit hole. They're checking peeling paint, windows, how much life does the roof have left, that type of stuff. So anyway, I know that this can be sort of a slippery slope for everybody trying to figure out what these loans are, especially for first-time home buyers. I've been trying to do under 10 minutes. This one's going to be about 13. So sorry about that. But, there's a lot to get into the weeds with here. And I'm just trying to make everybody as informed of a shopper or buyer that I can. So, hey, thanks for watching. Please leave any comments. Please also like and share if you thought this was share and likable worthy, I guess, if that's even a word. Again, this is Brian Kapple. If you have any questions, if you're wanting to buy property, if you're wanting to sell any property, get with me. If I can't find the answer, our brokerage has a lot of talented people in it, and I will be able to 100% for sure get you that answer. So hope everybody has a safe day. Thanks, and we'll see you soon. Bye.